Hersh Johnson to tell us what the 25 bips or basis points rate cut could mean for specific verticals of the markets and maybe the markets overall. Hersh, what is it that brokerages are penciling in if there is a 25 basis points cut?
Well, Neeraj, it's extremely interesting. Two reasons why. One, we have a new governor, and second, it's one of the biggest policy decisions in a while now. And therefore, you likely see a reaction on counters. Impact of a 25 basis point rate cut. One, it will lower loan rates as well as EMIs for consumers. It'll lower loan rates across the board. Any loan rate linked to the repo will come down, and this will lead to also some pressure on the rupee, and it may also aid consumption. So those are three pockets that we are looking at. One, lenders. Two, realty play, auto, because a lot of loans will get adjusted in terms of loan rates. Capex intensive sectors will get impacted because you'll require, or the requirement of capex will now get eased because loan rates will come off, and export facing sectors will get impacted because of the rupee. So all of those will come into play. Now I'll talk about specific names as well as sectors. One, on banks. One, initially you will have some bit of negative bias because you'll see loan rates come off, deposit rates will take time to adjust, and therefore some margin pressure seen in the near term. Positive overall because deposit competition will start to ease in the medium term, maybe 2-3 quarters out, and margins will eventually recover. Which banks are able to hold on to margins will obviously benefit disproportionately. Something like an Equitas is a very large fixed rated book and therefore may help that one. With regard to NBFCs, again a 25 basis point rate cut will directly translate to their borrowing cost coming down, and this will likely aid margins as long as yields don't come down as well. Even though the RBI will be keen to bring yields down, but if yields don't come down, it will aid margins. NBFCs with a higher fixed rated book will do better. NBFCs with a higher floating liability, which is the borrowing that they do, if that is linked to a floating rate, that will do better. Now I'll talk about some names which Morgan Stanley has thrown out. One, an M&M Financial Services, PBT impact of nearly 3%, but the stock is up 7%. SBI Cards, 2.5% PBT impact positive, but the stock has already moved up 5%. This is a 5-day move on the stock price, so keep your eye out because some of these stocks have already moved. Manappuram, 2.3% impact on PBT, 4% stock has already moved up. Now, negative impact, LIC Housing, negative 7% on the PBT, and the stock price move is there. PNB Housing as well as Canfin Homes, those are the other two. Quickly, impact on real estate, lower interest rates means positive for real estate. Impact on auto, positive on auto. Corporate lending likely to pick up as a result of this. Currency impact, IT stocks, pharma stocks will be in focus. Something like a Sona BLW within the auto segment, Samvardhana Motherson, JK Tyre, Balkrishna Industries. Some of them have large components of export and therefore may well benefit.
Thanks so much for laying that out for us, Hersh. And in fact, all of that could play out or in fact may devolve if there is a rate cut or there isn't, at least immediately for now. That is what we anticipate.